I don't post videos like this very often, and the reason why is because a strategy that I share is usually a strategy that can be used for a very long time. But this Forex strategy for 1 hour candlesticks is actually a revolution. So I decided to make a whole video and teach you exactly how this strategy actually works. But hey, don't get me wrong, when I say this is a great strategy, that doesn't mean this is the only strategy. Nevertheless, this strategy is actually gonna change the way you trade Forex in a very easy way. And the coolest thing in regards to this strategy is that it works for day trading, but it also works for scalping trading and also for swing trading. So stay up until the end of this video because you're about to become an expert on this strategy. Hey everyone, Christian here on YouTube. Welcome to a brand new video for the channel. Today, I'm going to teach you a 1 hour strategy for Forex traders for complete beginners. And this is the easiest strategy that you'll see out there without bunch of indicators, without bunch of numbers, without Fibonacci, without bunch of ATR. No, this is a beginner strategy that you can start applying just right now. But stay up until the end of this video. But hey, if you're new to my channel and you're into Forex, crypto, or any type of making money online, then this channel is for you. Buckle up and let's begin. All right, so we're gonna start with the strategy explanation so that you have an idea as to what is it that I'm talking about. Look, the first thing that we need to understand is that the strategy works for retractions. Retractions basically mean whenever the price is going in a certain direction, it goes back a little bit and then it continues on that direction. For instance, whenever the price is actually going up, the price of the asset will do this. All right, so whenever the price is actually going up, it's actually going to do this. But then there are going to be some retractions that do this. They bring the price down a little bit, and then the price continues to go up, and so on. So the point of this strategy is to be able to catch these entries right here, these ones right here. And whenever the price of the asset is actually going on the opposite direction, is actually going down, the price is going to do this, continue, and continue. And the point is to catch these little points right here. Now, the way we're going to catch these little points right there are basically using a few indicators that I'm going to teach you in this specific video. But I want you to fully understand how the strategy works, because we're not going to be trading on crossovers. We're not going to be trading on order blocks. We're not going to be trading with, I don't know, with MACD indicator. No. All we're going to be doing is we're going to trade with the trend and take advantage of it. So hopefully that makes sense. Now, some of you might got confused with the term trends. So let me just go ahead and explain real quick what is a trend. A trend is the direction that a trade or the pair is actually taking. If you notice this price is going down, if you notice this price is going slightly up, if you notice right here, the price is really going up. Those are trends. If the price is going down, it's actually called a downtrend. If the price is going up, it's called an up trend. So whenever there is a downtrend, what direction of the trade we are going to take? Put it in the comments. I'm going to give you a few seconds to sink in. If there is a downtrend, where is the direction of the trade we're going to place? Exactly. We're going to put a down position, which means a sell, a short, or a low position, right? If the price is going up, where is it that we're going to place our trade, right? It's up. So we're going to buy long or high position, whatever you want to call it, right? So we're actually going to go with the trend direction. How do we know about the trend? There are a few ways, but the easiest way to actually analyze what trend do we have is by adding one indicator called moving average. And the moving average, you're going to find it right here. You can just type in the indicator section. Moving, by the way, I'm using TradingView. Moving average. Oh, shoot, I put moving average. And this simple moving average that you see right here, you click on it, it's going to be added. And all you got to do is go to the settings and the inputs and select 50. That's it. 50 SMA. And as soon as you actually do that, you're going to realize that the little line or the moving average, whenever it is below the candlesticks, is actually going up. And whenever it is above the candlesticks, is actually going down. Right here is above and the price is going down. Right here is below and the price is going up, just like that. This is how you identify a trend. Now, how are these strategy settings? You need, addition to the moving average, you just need two different indicators. Number one is the stochastic oscillator, and number two is the RSI, or relative strength index. If you're going to be using TradingView, you click on the indicator section and type in stochastic. There you go. It's this one right here. As simple as that. And the other one, you can type in RSI, and it's going to give you this relative strength index. That's the one that you need to choose. Once you actually select the stochastic oscillator, you need to actually choose a few settings. And these settings are: the K length is 14, the K smoothing is 3, and the D smoothing is 3. 14, 3, and 3. And the levels are pretty simple: 80 and 20. 50 doesn't really matter, but if you want to have it right there, you can have it. 80 and 20 is the most important thing. And with the RSI, if you go to the settings, what you need to choose is the 14 period. And this is super important. You need to choose two different levels. Well, three different levels actually: 70, 30, and the 50. The 50, if you notice, I have it thicker and in green because that's the most important that we're gonna use in this strategy. Okay, so once you actually have that, you're good to go. And I forgot to mention, you have to be in 1 hour candlesticks in order to use the strategy. So once you have those strategy settings, you're good to go. Now let's go ahead and analyze a few entries in regards to the strategy. First of all, what you need to identify is the trend, right? So right here, we're actually looking at an uptrend. So what we need to wait for is the price or the 50 RSI line to be touched by the RSI. If you notice in this little section right here, this is the 50, the green line. What we need is the RSI to go to this level. So that way we know there's going to be a retraction. So we enter a buy position. Why? The 50 SMA is below the candlesticks. So it's going up. It's an uptrend, right? So once the actual 50 RSI is being reached, then we can enter an actual buy position. I selected this little like trading zone, but you don't have to. This is just like a support and resistance level that kind of got my attention, but you don't have to. Okay, so hope that actually makes sense. So once that level is actually reached, like it happened literally right here, you see it? It even crusted a little bit. So that's when we kind of enter a buy position. Now, in this trade, I selected the stop loss to be below this support level because there was a risk that the price even was going to continue going into this zone and then retract. Sometimes it happens, sometimes it doesn't, but I decided to take the risk. So what I do is that I enter a position based on the RSI. That's the one that I care about, the RSI, this one right here. Okay, now another thing that you need to look at is that the stochastic blue line was ready to do the crossing going up. So once you actually do that, you can select. Take a look. It almost reached the support level. Okay, so if you notice, my prediction was kind of good. It almost did. It literally touched the 50 SMA and then started jumping. That's what the trade does. I don't even remember what was like the risk reward. It was 6 in risk reward ratio, which means that if you risk $100, you would have made $600, right? If you risked $1,000, you would have made $6,000, right? It's a 1-to-1 risk reward ratio. So if you notice, the price continued to go up and boom, it touched the take profit level, right? What is it that we did? One more time, we waited for the RSI 50 to be reached, and we enter a position going up. Okay, so this is the first example. Let's go ahead and take a look at the second example that I have for you today. If you notice, this is on US dollar against the Japanese yen, right? So again, we are looking at this is an uptrend, right? The 50 SMA isn't below the candlesticks. The 50 RSI was literally touched right here. And the stochastic is in a position of doing this, the crossover against the orange line. So we have all the criteria is actually met. So we can enter a position at the lowest possible position. These can be market execution trades. Now, why did I put this stop loss in this area? Because there is a risk that the price would actually go and touch the 50 SMA. But I put it right here because if I mean, the 50 SMA is going to continue climbing, right? So if it actually goes into this area, now it's not going to touch the stop loss. Obviously, these are pure calculations. I could be wrong. It's not 100%, accuracy on this strategy, but that's one makes sense at all. And this is a trade with 9.48 risk reward ratio. Obviously you can do, some adjustments on the stop loss if you want to. And then right here, I decided to close the trade because if you notice, it's crossing the 50 SMA, which means that it might be becoming an actual downtrend. So there's no reason for me to continue risking the trade. I ended up at 4.6 risk reward ratio. Let's analyze the third trade. All right, so this is the third trade that we're gonna analyze, and I'm sorry that my camera was off. I'm not sure why. I think it ran out of battery or whatever. But look, this moment right here, what I did, this is an uptrend, is below the candlesticks, the 50 SMA. The RSI hasn't been completely touched. The 50, the stochastic is in a good position, but I did realize that there was a support level respected many times here. Then it was respected as a resistance level again. Then it was respected and again, and it was broken. So it told me that this might be the entry point because of the support level. I could be wrong. All right, I could be wrong, but in the end, this is a pure analysis trading with this specific strategy. It's not 100% accurate or anything. So I put the stop loss slightly below the 50 SMA, because if it crosses the 50 SMA, then it's going to become, or it's likely to become, an uptrend, right? So then I actually set the take profit and the stop loss. Now, one thing I realized in regards to this trade is that the potential of profits was really high. Because of this drop right here, there was a lot of emptiness that had to be filled out again. So, it's a trade with a lot of potential, right? So I decided to go all the way to 19 risk reward ratio, even below this level, right? So the trade started to go, dancing around or whatever. And so take a look, it jumped. You can close it there. Yeah. But I decided to go a slightly more aggressive with this trade. And then as long as it doesn't cross the 50 SMA, you're good to go. Right now it crossed it, but then it jumped. And this was because of the news. So I decided to leave it running, but it hasn't crossed, right? When it crossed and there's no other candlestick, like if the candlestick after the cross, it immediately, like this one right here, this was a calculation mistake because the stop loss was supposed to be there. But if there's one candlestick that opens and closes without touching the 50 SMA, that's a change in trending. So I should have closed the trade right here. But take a look at the amount of profits that I was able to have. 1845 risk reward ratio. It was just an insane trade. Now, for these specific trades that I'm explaining you, there's one thing that I want you to learn, and that is the trailing stop. Okay, trailing stop basically means that whenever the price continues to go into the direction that you wanted, like this, right? Boom, you can move your stop loss to a higher level to avoid losing the trade. Because there are some trades sometimes that you see that the price goes way above, but you don't actually move the stop loss. Then it goes back into the stop loss direction, and then you end up losing money on the trade. So what you can do is move the stop loss along with the trade. Now, the way that I recommend you to do stop loss is by choosing whenever there are some support resistance breakouts. Okay, for instance, here there is a support level that was broken, right? So that means that you can move your stop loss to like this area, right? Because this is the support level that was broken. Then we have another one right here. Do you see it? Then once this one is respected, you can move your stop loss to like this area. The price continued to go up. Yes, there is a new resistance level right there. Then you can move your stop loss right here. If you notice, boom, it went to the trailing stop level, but it closed. This could easily be a 12-to-1 risk reward ratio, but due to the trailing stop. I know some of you actually prefer to just move it to break even, but I believe trailing stop has a lot more potential. Go long and put a take profit that is way far away, and then keep on moving your trailing stop. In the end, there could be news that will bring your price all the way up, or if the news go against you and end up touching the trailing stop, you still made some profits. Does that make sense? So use trailing stop with this strategy, and I'm pretty sure you'll be good to go. Now, in order to continue with this video, I just want to mention to you what I think are the best brokers for you to use this strategy or any other strategy in Forex. And this part of the video is sponsored by these brokers, so I want to thank them for the sponsorship. I do have a link to all of these brokers below in the description of this video in case you want to open a free demo account with them. They are all fully regulated and they are super trusted. So go ahead and check them out right now. The first one is actually this one right here called IC Markets. IC Markets is the broker that I've been using since like 2016, and it's worked like a charm. Definitely my favorite broker in the world. The minimum deposit I think is like $200, the first one, and then you can deposit $5, $2, $3, whatever you want to. And the coolest thing is that they do offer a bank wire account that takes up to 2 days for you to get the money into your account. They say up to 5 business days, but I usually get it within 2. So it's actually super awesome. And more importantly, the broker is fully regulated and 100% trusted. The second broker that I want to mention in this video is this one over here called XM. XM is a fully regulated broker that I've been using since like 2018. And this broker has the minimum deposit of all of them with $5 only. Obviously, you can deposit more than that, but the minimum deposit is only $5. They offer, by the way, IC Markets offer platforms such as MetaTrader 4, MetaTrader 5, web trading platform, TradingView, and CTrader. XM though offers platforms such as MT4, MT5, and all of them for Android and Apple devices. And the third broker that I want to recommend you is this one right here called Black Bull Markets. Black Bull Markets also offers CTrader platform, which is amazing, plus MetaTrader 4 and MetaTrader 5. They do offer CopyTrader. I haven't really tested it, but it's also a very reliable broker. It doesn't have a minimum deposit, so you can test it as with any amount that you want to, and all of them offer a free demo account so that you can test them out. So I'm gonna have the link to all of these brokers below in the description of this video. Now, Chris, are there any pairs that you should avoid with this specific strategy? Look, I've actually tested this strategy with every single damn pair that you can imagine. And the only ones that don't respect this strategy much are the CHF pairs. Don't ask me why. They just don't. So my biggest advice is just stick to major pairs. Euro against the US dollar, Euro GBP, Euro CAD, AUD JPY, AUD USD, USD CAD, USD JPY. Does that make sense? So stick to those pairs. Don't go with any weird pairs or anything like that. But they do work also with stocks, gold, and some cryptocurrencies. I would avoid cryptocurrencies though because they're too volatile, but stocks and gold, it works like a charm. So go ahead and start testing it, back testing it on TradingView as well, and you'll be good to go. Hey, before I finish with this video, I want to give you a warm invitation to this little baby right here called BLW Forex Copy Trader. Yes, this is my own Forex copy trader where the free signals that we send in the Telegram channel are now applied directly to your broker. So if you don't have the time to trade or you don't feel the confidence to actually place the trades on your own, now we can copy those trades for you into your broker. How does it work? You go to blwforexcopytrader.com, read all the information, take a look at the amazing numbers that we've had. We've had a balance increase of 40% this year so far, and we keep on growing. And once you actually are ready, just go ahead and register and start copying those trades. You don't have to have I don't know, a VPS. You don't have to be connected to your computer. It works with any broker that has MT4 or MT5 trading platform. So what are you waiting for? This time, trading is fully automated and not by a robot, but by ourselves. We as a traders are placing positions and they get copied into your account. So go ahead and check out. The link is in the description of this video, blwcopytrader.com. Hey, so hopefully you enjoyed the content of this video. If you did, go ahead and smash the like button as usual to support this YouTube channel. But more importantly, if you have any questions or comments to share, you can always use the comment section below. I'll be able to answer the questions through shorts. So the next short might be the answer to your question. So put the questions right there in the comment section. Be subscribed for more videos just like this one, and I'll see you on the next one. Peace.